jump into this one. Okay, so we're gonna go over here and we're gonna search for let's search for jobs, and we have the weekly jobless claims. So I gotta update this definition. Did we update this already? All right, so what is the weekly jobless claims? So the Department of Labor's initial jobless claims report shows the number of people who have recently lost their jobs and applied for unemployment benefits for the first time. It's released every Thursday and gives a snapshot of how the job market is doing in the United States. Although it was released this Wednesday because Thursday was Thanksgiving, so they released it a day earlier. It says, here's a simple breakdown. Initial jobless claims. Initial means these are people applying for unemployment benefits for the first time in a recent week. It doesn't include people who are already receiving benefits from earlier weeks. Why is this important? It's the number of claims. If the number of claims is high, it usually means people are losing jobs, which could be a sign that the economy is struggling or slowing down. If the number is low, it means people are losing jobs, which is often. It says if the number is low, it means fewer people are losing jobs, which often points to a healthier job market. How is it used? The report helps businesses, governments, and even regular people understand if the job market is getting better or worse. For example, if jobless claims suddenly spike, it could mean companies are laying off more workers, and that might be a warning of a possible recession. If claims are dropping, it may suggest that companies are hiring or keeping employees, which is a good sign for the economy. It could also mean people are just stop looking as well, right? In short, the initial jobless claims report is a quick weekly update that tells us how stable the job market is and gives us hints about what might happen in the economy. Let me check something real quick. I was gonna do something the other day. Let me see. Let me see. Where did I write this down the other day? Before we jump forward. Let me see. Where are my notes? What do I do with that? Let me see. All right, there we go. Just looking for something really quick. All right. Let's see. All right, let me copy that because I was going to add an example for the finance funds processor for our dear friend Miss Freckles, and I didn't get to do it, so I'm gonna do it now. Weekly jobless claims. Let me take this. So we're gonna do it right now. We're gonna take that, and then we're going to go to. Let me take. Just copy that whole thing. There we go. Patch. And I'm gonna go here and here, and I'm gonna throw in another example. We're doing it on the fly. We do it live. So, finance funds processor. And let me go to this right here. And we're gonna go to here. See, I take care of my friends. Let's go to here. I will clean that part up after. All right, so I'm going to drop this in here. And we're going to send that patch. Boom. So now, if we go back over to here, say, can I refresh work on this? Let's go to, let's see if that's going to work. Let's see if that is going to work. Boom, look at that. Look at that. Now we have our finance funds processor. So how could this weekly jobless claim impact a finance funds processor for my dear friend Miss Freckles, who kindly let me know what her position was, and we're going to use that. All right. So let's get to it. So let's see. How does this impact a finance fund processor? So the weekly jobless claims can have several impacts on a finance fund processor, especially in terms of market sentiment and financial landscape. Here's how, right? So market sentiment and economic outlook, rising claims. If the report shows an increase in jobless claims, it may signal weakening labor markets, which can raise concerns about the broader economy. This could lead to a downturn in financial markets, affecting the valuation of investments and increasing the uncertainty that finance funds processors need to manage in processing transactions and allocating funds. So, by the way, Ms. Freckles, as I'm going through this, right, let me know if this resonates with you, if this makes sense, if it's true or not true. Like, let me know. And let me know if what they're saying based on the report of the jobless claims, if you do think that it can impact the things that I'm reading, because I just pulled this up right now. So I'm just curious to know what you think, all right? So falling claims. Conversely, a decrease in jobless claims suggests economic resilience and job growth, which can improve investor confidence. Positive sentiment may lead to stronger market conditions, which may result in increased trading volumes or faster fund inflows and outflows that finance funds processors must handle. Liquidity and cash flow. Economic disruption. So if high jobless claims are a sign of an economic slowdown, there may be impacts on liquidity and cash flow. Finance fund processors may face higher volume transactions in terms of unemployment benefit payouts, government relief funds, or shifts in how funds are transferred due to changes in consumer spending patterns. Lastly, high interest rates and inflation, or not lastly, but interest rates and inflation. Jobless claims can influence the Federal Reserve's decisions on interest rates. Higher claims could signal a weakening economy, leading to a potential interest rate cut or fiscal stimulus. These decisions impact the flow of money and the way finance funds are processed across various channels, including investments, loans, and business transactions, right? Next up, investments and strategy adjustment. For fund managers or investors that finance fund processors work with, an increase in jobless claims could lead to adjustments in portfolio allocation. A higher jobless rate might prompt a shift towards more conservative investments or an increase in government bonds, affecting the way funds are managed and processed. And then we have number 4, regulatory and compliance impact. Increased jobless claims might prompt more government intervention, such as unemployment benefits or stimulus programs. Finance fund processors may need to adjust their systems to accommodate these new financial programs to comply with regulatory frameworks aimed at supporting citizens during times of economic downturn. And then lastly, processing volumes and timing. In times of higher claims, finance fund processors may see an uptick in number of claims being processed, especially in government funds if government funds are involved. For example, unemployment insurance. This may result in increased workload, requiring adjustments in processing timelines and prioritization of certain transactions. In summary, the weekly jobless claims reports affects finance fund processors by influencing broader economic conditions, cash flow, market sentiment, and regulatory demands, all of which can directly impact the speed and volume of funds processing. So that is interesting. I just learned a lot more about what finance fund processors do and also how this jobless claims report can actually affect them. So with that being said, let's jump over to the report. All right, we're going to zoom in real quick. All right, so we're going to go through this really quick because I don't want to spend forever on this, but the week ending of November 23rd, advanced figures for seasonally adjusted initial claims was 213,000, a decrease of 2,000 from the previous week's revised levels. The previous week's revised level was always revised up from 213 to 215. So it almost stayed the same, but it was revised upwards. The 4-week moving average is 217,000, a decrease of 1,250 from the previous week's revised average. The previous week's average was revised up by 500 from 217,750 to 218,250. The advanced seasonally adjusted insured unemployment rate was at 1.3%. Very, pretty much the same that it's always been. I'm not going to go through all these numbers. Let's see, unadjusted data, 2043, all right, an increase of 29,000. Let's see. Let's go to the initial claims for UI benefits filed by former federal civilian employees totaled to 523. In the week ending of November 16th, a decrease of 92. There were 330 initial claims filed by newly discharged veterans, a decrease of 78. There were 4,757 continuing weeks filed by former federal civilian employees, the week ending on November 9th. Let's see. All right. So the highest insured unemployment rate in the week ending of November 9th were in New Jersey at 2.3, California 1.9, Washington 1.9, Alaska, Puerto Rico at 1.8, Nevada, Rhode Island at 1.6, Illinois, Massachusetts, and New York at 1.5. And the largest increases in initial claims for the week ending November 16th were in Utah, 538, Minnesota 381, Missouri 552. Shout out to Missouri and Miss Freckles out there. Idaho at 200, Louisiana at 199. And while the largest decrease were in California at negative 5,000. Good Lord, that's a big number. Georgia, negative 1,952. New Jersey, negative 1,423. Hey, look at that. New Jersey made the decrease list for the first time that I've seen. Texas at negative 1,160. And Ohio at negative 1,125. Alrighty then. So we are going to check the chat real quick to see what they have been saying.
It's Tech Coach Ralph TVV.
Yeah, men lying, women lying, numbers manipulate. Don't matter what no one say, I throw the stats away. No need for calculators, we already greater. No need to validate us. It's Tech Coach Ralph TV. Get up, it is Saturday morning. I've got to get my coffee cause I can't stop yawning. Get to watch my favorite show today. Men lie, women lie, numbers manipulate. Tech Coach Ralph and Mitch and Yakar, that's how it be. Shooting galaxies from their hands, it's Tech Coach Ralph TV. You don't need to grab your remote because you'll be floating free. Don't gotta worry about negative forces, it's positivity. Get up, it is Saturday morning. I've got to get my coffee cause I can't stop yawning. Get to watch my favorite show today. Men lie, women lie, numbers manipulate. Get up, it is Saturday morning. I've got to get my coffee cause I can't stop the yawning. But I get to watch my favorite show today. Men lie, women lie, numbers manipulate. Numbers manipulate. Numbers manipulate. Numbers manipulate. Men lie, women lie. Numbers manipulate. Numbers manipulate. Numbers manipulate. Numbers manipulate. Numbers manipulate. Men lie, women lie. Numbers manipulate. Numbers manipulate. Tech Coach Ralph and Mitch and Yakar, that's how it be. Shooting galaxies from their hands, it's Tech Coach Ralph TV. You don't need to grab your remote because you'll be floating free. Don't gotta worry about negative forces, it's positivity. Tech Coach Ralph and Mitch and Yakar, that's how it be. Shooting galaxies from their hands, it's Tech Coach Ralph TV. You don't need to grab your remote because you'll be floating free. Don't gotta worry about negative forces, it's positivity. Get up, it is Saturday morning. I've got to get my coffee cause I can't stop yawning. Get to watch my favorite show today. Men lie, women lie, numbers manipulate. Yeah, number manipulate. Yeah, numbers manipulate. Yeah, numbers manipulate. Numbers manipulate.